Smart money just gave us the perfect setup again, and I banked on it for a solid trade while profiting for $965. If you're struggling with entries using ICT concepts, this breakdown is exactly what you need. In this recap, I'll walk you through my trade from my higher time frame bias to the exact entry confirmations I used. You'll see how I identified liquidity grabs, mitigation points, and executed with precision. I've been studying ICT and smart money concepts for 3 years, been trading the market for 8, and this approach has completely changed my trading. Today I'll show you why. Stick around till the end because I'll also reveal my personal checklist before entering any trade so you can refine your own process and take higher probability setups. Let's get started. Here, as you can notice, the market was already at 9:43 a.m. in the morning New York time. I'm only trading the AM session because in my opinion is the most volatile and offers the cleanest moves. And this is something that I was looking for this morning. Basically, for us to retract into this inversion fair value gap that is annotated in green, and for us to find a fair value gap in form of a CB, which is a red candle, if lower. Basically, my whole bias for the morning goes for us to take this low and probably go into a fair value gap, which is annotated on a higher time frame chart on a daily basis. Here, as you can see, the bodies were respecting the midway point of this inversion fair value gap, and this is something that I wanted. That was my first confirmation that my theory might pan out. Speeding up a bit, we can notice that we were moving lower as we were expecting, and now I was looking for a fair value gap in form of a CB, which is basically a clean red candle. At the same time, I want to see a swing low, this one or this one or this one to be taken, and this is something that I received here. That was my second confirmation. And here, as you can see, I already annotated in red that this would be my entry. However, the market was very volatile, and I realized that if I were to enter here, my stop loss would have to be here, which would be 50 handles, $1,000, which is more than I plan to take on as risk, because usually my profit is the same, $1,000. I'm trading a fund with the account from Tick Trader, and they ask me to have a 20% consistency. Therefore, it's not worth for me to risk 1,000 in order to make 1,000, where my hit rate is 70%. I'm still gonna make money, but it's not gonna be always in my favor. Therefore, I'm trying to stay away from highly speculative trades unless all my confirmation bullet points are there. And this morning they were not, because of this volume imbalance. Volume imbalance basically is the difference between the closing and opening of the next candle, and this is something I don't like to trade. Therefore, I decided at the moment I'm just gonna wait. Maybe another fair value gap is gonna form because we have so much liquidity up for grabs down here, and we had also 2 more sell side or basically swing lows to be taken. Here, as you can see, I already annotated another fair value gap in form of a CB, basically a red candle that was not touched yet. And I was waiting for this liquidity to be grabbed first. The main idea was I'm going to enter the short here. However, I don't want to risk $1,000 as I mentioned before. And if my bias is correct, I don't need to place my stop here above this swing high, because I don't want even for the price to leave the midway of this fair value gap, basically, that is annotated here in red. As you can see, the price was moving higher. Meanwhile, this liquidity was still up for grabs, and this is something that I was looking for. However, I'll be honest, this was not the cleanest move. I was watching the other markets. As you can see, Dow was moving upwards. Meanwhile, the S&P and the Nasdaq were moving lower. At the same time, I was noticing we have these relative equal lows on S&P, and I was like, okay, I have volume imbalances as well that usually when they leave them like this, they're gonna be attacked again. So I just decided at this moment, I will enter the trade. I will place my stop loss above this fair value gap, and we'll see if we move lower. Here, as you can see, I entered the trade, and my main idea was, considering how volatile the market is, I'm just going to place my target at the midpoint of this week here. And you're gonna see that now. I was like, this looks too good to be true. It's gonna be taken. This liquidity is gonna be taken at some point. I consider big wicks to be like fair value gaps. They're gonna be attacked at some point. The main idea was for us to grab the midway of this and go lower. I've seen times when the price is moving lower, it touches the midway of a wick, goes higher, and then it takes the last liquidity. And I didn't want to get involved in a move like this. Therefore, I decided I'm just gonna take $1,000 and that's it. And as you can notice here, it happened quick, fast, no pain. It took us 3 minutes, and basically most of my trades took this long. I'm trying to find the best opportunity. I'm not trying to stay too much in the market because at some point you're going to be tested, and this is something that I don't have the patience to do. I have the patience to wait for the setups, but when I've seen myself that I'm profiting, I want to take that money and go home, because I'm planning to trade these markets every day. And you're going to see a lot of moves that are going to go against you just at the end to grab that liquidity that you're targeting initially. Therefore, I'm the type of trader that is going to take the profits very fast. I wait for my trades to be confirmed. I place a stop loss all the time, and I'm not going to rush if the price is stagnant. However, if I see it moving towards my target, I'm just going to take my profit. There's nothing better than just profiting off your trades. Now, as I promised, I'm going to show you the checklist that I'm using. So basically here, as you can see, we had the sell side taken, right? Which was this sell side. We had the fair value gaps, 2 of them. We had the order blocks. I don't annotate order blocks, but I look at them all the time. I'm just trying to keep a clean chart. I still have a lot of things annotated. However, it's just for visual purposes, it's better for me to annotate only the fair value gaps. And also we had volume imbalances, as I mentioned here. The candles were moving. They were basically indicating they want to go upwards, but they were forming volume imbalances at the same time, which means it's just another sign that I've learned and I've observed over the years of trading, that every time they're forming volume imbalances like this, they're going to be attacked sooner or later. And the risk management, as you can notice, for the handles is something that I respected, and I didn't move to break the stop loss to break even, because that was our target at 1 to risk reward. And this is the game plan. As you can notice here, all of them have been fulfilled. So that's how I executed this trade using ICT and smart money concepts. The key takeaway: always wait for liquidity grabs and fair value gaps to be formed before pulling the trigger, because patience is everything. If this breakdown helped you, drop the comment below. Let me know your biggest takeaway, and if you have any questions, I'll be answering them in the comments. I've got more deep dives coming, refining entries and trade management, so make sure to subscribe, like, turn notifications so you don't miss the next one. Remember, smart money always leaves clues, as inversion fair value gaps, as volume imbalances. The question is, are you reading them right away? See you in the next one.